What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie, Will and Ben here today going through the big news of the week. Gents, how you been? How's your week been, Ben?
Yeah, good. I mean, I feel like I sound like a broken record, but busy week, good week.
Yeah.
Yeah, been plenty going on, and I think there's been some really interesting stories as well.
Yeah.
For our readers.
I missed the last What's Making Headlines because I was actually on leave, so thank you both for stepping in and doing this on your own. Did a great job. But I was, over in Queensland, firstly for a little bit of a holiday, but then also for the Loan Market Conference up there, which was held in Sunshine Coast, which was a lot of fun. It was a scale-up conference with Loan Market, the brokerage brand brokers. So it's probably lots of brokers there, maybe like 900, 1,000 people. Really fantastic few days up in Sunshine Coast. So nice to get some winter sun as well. Escape the drizzle and rain of Sydney for the sunshine of Queensland. But I think, some of the really interesting stuff that was coming out of that was what they've been up to. Obviously, hearing updates from the CEO, David McQueen, from the Executive Chairman, Sam White, and a lot of their senior management. So their CMO, their CTO, their CCO, talking about all the things the brokerage has been doing. And some of the things that actually we ran stories on The Advisor this week, which were making headlines that lots of people were interested in, were what the brokerage loan market is doing with artificial intelligence. And what we heard at the conference was them saying they've really actually started embedding not just things like off-the-shelf tools like Gemini. They've sort of rolled that out for free now across all loan market brokers, and really emphasizing that brokers have to be doing it through their own logins, not just using the free version, to make sure that it's all sort of, protected and not breaching any sort of privacy rules, but also looking at building out their own tools. So these are the things that they're in alpha testing at the moment, according to Jason Fennell, who's their head of technology, and he was talking about this whole new range of things that they're offering their brokers and testing at the moment, with plans to roll out later, which kind of do a bit of everything, to be honest. So I think he sort of was saying they've got note taker AI coming out. So this is something that will kind of review client and file data and generate tailored exit and strategy notes. So exit strategy notes and general strategy notes about the client. It can calculate things like super balances to support the recommendation, and then kind of comes to a conclusion or recommendation for the broker to review, to be like, based on this conversation, this is maybe what you're going to do next. There was another tech piece they're testing at the moment, which is an AI system that flags file quality. So it'll review a file and then kind of be like, this is inconsistent, this is potentially how you can fix it. They'll look at the data as well and, for example, be like, this deposit doesn't actually show up in the savings account, so you'll need to figure out what that disparity is, and kind of flagging to brokers some things they need to go and test further. It's also a good quality assurance plan for them. They've got one which is also a retention tool. So I guess similar to some things in market already, like Sherlock and Stride, where it can kind of show you what your clients' rates are doing and whether they're likely to refinance potentially away from you because of an uncompetitive rate. They've got that kind of tool in the works at the moment. So I think they've been testing it and sort of using also open banking data in the future to see which customers might be at risk of leaving and why. And so that gives them a workflow to actually then go and chase that customer. And then finally, a data query assistant that allows brokers to ask operational questions in natural language. So sort of saying things like, my commissions have dropped recently, why? And it will go and review what's happened and find out why, or saying which referral partners have stopped referring to me, and it will go through the system again and find that information for them. So that sounds really interesting to me. And the whole kind of session at the conference that was focusing on this AI tech tool piece was around, this is all really helping you get off the tools for so much of the sort of burdensome administrative stuff, so you can do a lot more of the lead generation, the closing of clients, and the strategy, which of course is what brokers most enjoy, is actually doing the strategy for the clients and kind of figuring out where they're going, what they want to achieve, and helping them get there. So really interesting there. And I think particularly because it's not the only brokerage that, of course, has been looking at this. We also heard from Aussie recently, and they were talking about rolling out agentic AI, and had a conversation with Sebastian Watkins a few weeks back about that as well. So huge sort of plans afoot to get all of this sort of technology out into the market and help brokers really focus on what they do love most, which is the face-to-face stuff. How do you guys think about this? Do you think AI will kind of replace the sort of broker admin? Do you think it will ever replace brokers?
I don't know. I mean, I think my personal view is for something like a home loan, you'd want to be dealing with a human or something like that, or any type of finance really. But yeah, I think from what we've seen from Loan Market and Aussie in terms of how they're talking about using AI, it just seems to sort of get rid of some of the more onerous, time-consuming tasks that a support person or something like that would do rather than the broker themselves.
Yeah.
Which is probably good.
That was going to be my question on the conference. What was the feeling that... Well, did they mention kind of admin staff or backroom staff and how that would change?
Yeah, so I think there were a couple of like client service managers, the CSMs they call them, who are a bit like, what does that mean for me? That's my whole job. But I guess like it kind of means they can also do more of the higher value stuff, because rather than actually having to go and do the analysis, for example, let's say it's around the question one, I can't remember what that was called now off the top of my head, my data analyst. So sort of saying, you know, rather than having to go and spend hours finding out which referral partner might have dropped off and why, and then like, you know, tracking how many deals they actually referred and when the last one was, rather than having to go and find all that information, they can kind of do this quickly, but then get to the answer more quickly. So I guess they would still have a role. They would still need to do the follow-up. But yeah, I think their roles would just change.
Yeah, I think it's interesting because it's changing so quickly. Like our jobs are the same, that no one quite knows where it's going, and everyone says it's a great thing.
Yeah.
But it is also like, where is this moving? And I think broking genuinely is actually safe, because everyone wants to speak to a human for mortgage broking. But you do wonder, like, maybe on the other side, like the more admin side, what could happen?
Yeah, and I think this is like really, it's almost like the third industrial age now, because we're kind of going through this thing where everyone's having to kind of consider, well, what does my career look like? Even for us as journalists, being like, you know, what do we do if suddenly AI can just take what you've written before and regurgitate it? Like, you know, there's a lot of copyright issues as well. So there's a lot, every single industry, I think, is thinking about what does this mean for us, and having to reskill or kind of shift what you do day to day to keep relevant. It's scary. It's scary, but cool.
I think it's nice for broking that it's kind of exciting that you think, oh, we can do more of the value add stuff, and in theory journalism. But for broking, it's nice that, well, like, if you kind of don't embrace it, you get left behind.
Yeah.
And there's less talk about the downsides and more how can we use it, which is good.
I actually moderated a panel at the Loan Market Conference, which was about whether brokers thought that a AI-driven mortgage advice would replace broking advice in the next 10 years. And obviously, we had 3 brokers on each side, for and against. And it was actually really interesting because some of the brokers who were talking were actually from Loan Market New Zealand. So it was great to meet some advisors from over the pond. But I think even the people who were in the affirmative camp saying, yes, borrowers will go to AI first before in the next decade, they were kind of saying, but only really for the straightforward stuff. So basically, their argument was, we use AI already, we're loving it. It frees up time for us to do the strategy. But, you know, we think that first port of call for a lot of people will be an AI agent, let's say ChatGPT or Gemini or whatever platform they're using. People will probably start their journey asking that questions before they then decide to go to the broker. So they were kind of saying, we think it might be mortgage first advice, but won't be the way that actually the borrower then completes the transaction. They'll then come to the broker following that initial research phase. And I guess you could kind of argue that is probably the case for a lot of people nowadays. Like, they're not actually coming to the broker first up being like, I know nothing at all.
Yeah.
They would have done some preliminary research online. So I think that's sort of still kind of what we're doing at the moment. I just don't see them transacting all the way through, is basically the argument for the people who are saying yes. People in the opposing camp, very humorous. There was a lot of jokes going around, a lot of personal barbs as well going between the two debating camps. It was a lot of fun to host. And I think they were kind of saying, you know, at the end of the day, everyone wants advice. It will never replace us. So they kind of ended up at actually the same place, which was it will never actually replace a transaction. We'll always still be at the end, you know, wanting to look people in the eyeball and help them through this journey. But they may well be using technology to help them get there first and get across the information first.
Just one question on that. When you said the kind of basic stuff, you'd use AI. Hypothetically, if you were at a brokerage and you just started and you were doing the kind of basic stuff, and then suddenly AI was doing that role instead of you, how do you think, or do you think it would change, like maybe people that are just getting into broking at a larger brokerage? Do you think the role would be changed about kind of training and...
I mean, it's always interesting, and I think this is the same for, again, loads of industries, is being like, well, if you're removing a lot of that like background research and absorbing of information, how do you learn? Because they'll just be like, well, if we can get AI to do a lot of the initial sort of research stuff, then you almost are kind of stuck in a way of being like, well, how do I learn? Because a lot of people learn by doing. I think, though, it will still be, you know, if a client is sort of using AI for a lot of that stuff, and then coming to a broker to actually complete the transaction, the new brokers will still be actually seeing how that transaction progresses, or be seeing what the AI recommends. So it will still be kind of monitoring that. So they should, in theory, still be learning. But I think, it will also change the way that people think and operate. And lots big ethical questions today. But I think that was one of the big sort of things from the Loan Market Conference that I sort of took away. The other thing that they were doing, which I thought was pretty interesting, is they've launched they will be launching actually in September, a big multi-million-dollar consumer campaign, which is, again, another of a couple of big consumer campaigns that have launched. I think the MFAA launched one last year or maybe the year before. Aussie have recently launched one as well. So the two big brokerage brands here, like, going head to head in what they're doing. But I think this also kind of plays into the fact that because so much of the AI story is kind of moving into things like advice, and the concern that a lot of people have about, you know, will AI replace advice and professional services, kind of makes sense that people now are advertising to be like, remember, a broker is a specialist, they're an expert, they can help you through it. And the ad campaign they've got coming up is sort of talking about really helping loan market branded brokers specifically kind of have that visibility of being like, we can help you get to where you are. So I think the slogan is make it yours. And when they were presenting I think it comes out, the 1st of September, when they were presenting the campaign, they were saying it has an earworm, which I love that term, an earworm at the end of the advert, which is a whistle. And that will kind of helpfully help embed the brand into people's brains by, like, sonically, so being able to remember a sound. But whenever people say it's an earworm, you're like, that is going to drive people crazy.
I've never heard that phrase. Is that a
earworm?
marketing phrase?
Yeah. I think it, like, a lot of the time is, you know, used in like music.
Oh, okay.
But so if you think of like, I don't want to sing, but
that wasn't part of it.
I was a bit like, I'm not going to sing it. But there's a lot of like jingles where you can kind of, you know, you can recognize a brand based on the jingle.
Like the McDonald's one, isn't there?
Yes, I was going to say, I'm loving it. Like that sound, there's a little like jingle that goes with that. It's kind of similar to that. So they've created one for Loan Market. So expect to be hearing that a lot. And so they'll be doing that. And I think this is really about sort of showing consumers this is what a broker can help you do. I think it's called Make It Yours, and it's got loads of different adverts about how consumers can be tailoring their house and like making it their own, and then kind of doing it in partnership with a loan market broker. So really similar again to what we saw with Aussie recently launch their big campaign in different sort of areas. I think in a lot of transport hubs there's Aussie adverts. I actually saw one on Oxford Street out in the wild the other day, and I was like, oh look, it is a real thing. My husband made huge amount of fun of me because I actually took a picture of it and was like, oh, cool. And he was like, are you literally taking a picture of an Aussie advert on like a Saturday night on Oxford Street? I was like, yeah, look. Such a nerd. But anyway, so that's what the Loan Market Conference is all about. While I was doing all of that, there was still news going on the ground here. And Will, you wrote a story about lots of things going on that brokers are seeing with the generational wealth transfer, which was well read and well liked. Tell me a bit about that, please.
Yeah, so this was new research out from Wilson's Advisory, and it was on essentially the number of people that are going to retire in the next 5 years. So 700,000 Australians, and they're going to pass down $3.5 trillion over the next 20 years. Huge. So a massive amount, yeah. And I think kind of growing population, the way people will look for kind of wealth advice will massively change. And so we reached out to brokers to kind of hear how that's affecting their job and how they're planning for that. We spoke to Alana Siebel, who is a finance broker at My Finance Matters. It's kind of financial planning and brokerage business rolled into one. And she said, brokers are increasingly expected to understand the bigger picture, offering guidance that takes into account multi-generational financial planning, including tax and estate considerations. So really interesting to hear kind of their views and how a lot of it was around kind of, the bigger picture and tying into wealth advice and working with accountants and tax advisors and wealth and financial planning, and kind of seeing it as a broader financial planning thing. And lots of people actually mentioned not just as in people coming in as a family and specifically talking about inheritance tied into property.
Yeah, I think a big one of this, again, is kind of going back to that whole broker as an advisor, but of course, caveating it, not wealth advice, not generational wealth advice, working closely with planners and accountants to ensure that they're actually just making sure the financial advice that they're getting is accurate before they come to a broker and maybe talk about credit advice. But it does also, I think we talked about this before on the podcast, is talking about, well, if all of these people, 700,000 odd Australians, are actually looking at retiring, are they going to be downsizing? Are they going to be, needing to have some finance to go into retirement homes? Or are they going to be handing over property to their children? In which case, will we see a drop in people buying property because they'll be inheriting it instead? So I think that'll be quite an interesting sort of trend as well to look out for, as being like, will that mean that fewer people will be buying because they'll just be waiting to inherit a wonderful, massive house from their parents?
Yeah, or things like reverse mortgages could easily spike.
100%. And we're already starting to see that in a lot of the data coming through. It's not just reverse mortgages, but also other types of finance that really target retirees and pre-retirees. I think we're seeing a lot more of innovation in that space at the moment. Thinking just off the cuff of, the 10-year interest-only loan that A&P launched recently. Midkey's got a home equity product that it kind of targets the sort of retiree and younger phase of people. So I think there's lots of different things going on here. We're going to take a quick break here. When we come back, I'd like to pick your brain, Ben, about some of the things you've been writing on for the Advisor magazine, about what kind of trends we're seeing in lending and the kind of new types of borrowing segments that are coming to the fore. And we'll get into it just after this message. So, Ben, we've been talking a lot here about, the new kind of things that we're seeing in market, the trends at the moment, and what kind of might be coming to the fore. And I think some of the stuff you've been writing for the Advisor magazine recently, the August edition for which is out now, includes some of the lending borrower cohorts that we're seeing and talking to lenders about what they're seeing. There was one in the August edition, which I thought was really interesting, with Bridget, which is around bridging loans and the trends they're seeing. And what did they find and what were they telling you?
Yeah, so we've worked with Bridget before on these sort of bridging loan features where we're sort of unpacking what we're seeing in this space. So we kind of did one, I think, 12 months ago, and then we wrote one for the August edition that's just out now. And it was really sort of, what we wanted to show with this one was kind of the different use cases for something like bridging finance when you're sort of seeing house prices so high, and just like the different types of borrowers you can use, or the different ways bridging can be used to unlock the equity that might be sort of, because it's so much money, I think might be sort of frozen in a little bit. So I chatted to Stephen Doyle as the Chief Commercial Officer, I believe. Chief Commercial Officer? That's right, at Bridget. And we just kind of talked about a few different borrower profiles. So there's investors, obviously, but also downsizers can start sort of use bridging finance, and retirees, people going through relationship breakups as well.
Yeah.
And I guess like the big theme we were trying to show is just, it's one of those mechanisms that can make something like a massive property. It can buy you a little bit of time, I suppose, to sort of make sure you're not rushing into the next place rather than...
And I think that's the problem at the moment with house prices. I mean, I saw some revised house price forecasts from the major banks last week. I think CBA now, it was expecting 4% increase in house prices this year, and it's revised it up to 6%. House prices going really, really strongly. And I think that really freaks a lot of people out, because they're like, well, if I do want to downsize or upsize or move into a different property, by the time I actually get my finances in order, that house price might have increased by 1 or 2%. If it takes you 3 months, let's say 4 months, that could actually happen. And then you'd be priced out. So I think bridging finance really becoming popular at the moment because of the strength of house prices and how quickly they're accelerating, and people saying, I just want to move now. I want to have that finance available to me. And, this sort of solution can help me do that while avoiding the panic or the concern I might feel with escalating house prices potentially pricing me out. So I think that's really interesting. And that feature was so interesting to me because I think a lot of the time I only really thought about bridging finance when people are selling a home to get into another one. So let's say the downsizer opportunity. But there was a whole range of different solutions that they were talking about in that. And the investor angle I thought was pretty interesting as well. Looking at how they're seeing people use bridging finance. That was a fascinating article. So if you haven't read it, go and check out the August edition of the magazine. It's obviously online or in print if you're a premium subscriber and get it posted to you. And I think that, again, comes to a lot of the trends we're seeing elsewhere in market. I mean, the investor market been dominating at the moment. We did see some recent figures from Loan Market, just because I was at the conference. I'm thinking a lot about them at the moment. We saw some figures from them saying that the investor borrower segment was something like 34% of all loans that they wrote in the month to June. And we saw some figures from A&P this week when they released their first half results for the year. They were showing that their investor segment of the market, I think now is about 39% of all their flows was investor. So really seeing this huge amount of activity at the moment.
So is that the rate cut that's prompting that activity, and then people want to get in before the house prices get too high?
I think it's partly that. I think it's also a lot to do with serviceability. So it might be that people are thinking, actually, I can't buy, let's say here in Sydney, but I can buy an investment property over in WA, or I can buy an investment property down in Adelaide. So I think people also just looking elsewhere to being like, well, I'm priced out of my local market, but I can buy a property that I can rent out somewhere else and just get onto the ladder that way. So I think that's driving it a little bit. I think from A&P's perspective, they've been specifically chasing investor. So they were kind of saying, we price really well at the moment. So that's kind of led to a lot of flows that way. And for brokers as well, I think they've been sort of saying, well, there's just lots of things that investors can do at the moment. And sentiment is pretty high. So yeah, huge amount of activity. But it's still upgraders, obviously, who kind of carrying the most of the market. More than half of the market is people actually moving to a second property after having already bought their first. Speaking of all the things we've been seeing from lenders, though, some changes coming around for some of the smaller banks, because we finally had the review of small and customer-owned banks come out. Yep. And we're waiting for this because they handed it over to government. This is the Council of Financial Regulators handed it over to government earlier this year. And we've been waiting for the report to come out. And finally, Treasurer Jim Chalmers announced what they'd be doing with it and what it said. Give us a cliff notes, Will. What did it say?
Yes, so essentially 9 recommendations, and the government have agreed to 8 of them. The headline, I would say, is the 9th one, which was essentially recommending a lighter touch framework for very small banks. And this kind of ties into this tiered regulation approach for banking. Well, obviously, the bigger the bank, the tighter the regulation. And they've recommended just lighter recommendations for very small banks. The government have essentially, they didn't say no, but they didn't agree to it either. They're going to go seek feedback, go through consultation, and then we'll kind of revisit it. They didn't give a time frame, but that was the one they didn't agree to. The other 8, one of which was the tiered banking system, which they agreed to last week. In terms of the other ones, they said, I mean, there was a lot in that. We have actually covered most of it in the past. And the tiered banking one was the big one. One of the others was an increase in cap on covered bonds for Australian assets, and then an annual compliance certificate with ASIC for banks. Obviously most of it was around kind of small and medium-sized banks, and they've kind of hinted at it before. But it was interesting that the government just essentially agreed to 8 of 9, and then that lighter touch one, which I did look into the report, and there wasn't loads of lighter touch was the phrase used, and there wasn't loads around what that would specify.
Look like, yeah, I guess, well, now it's sort of going into what does that actually look like.
Yeah,
and we
exactly.
had from the Prudential Regulator maybe last month, I think, when they were sort of talking about what they would potentially do, looking at smaller regulation around smaller banks. Now, I guess some arguments would be like, well, why should smaller banks have a lighter touch regulatory system? Because surely if they're accepting customer deposits, if money is in the bank, then you should be protecting them in exactly the same way as you do with major banks. From an APRA perspective, they're like, well, the risk to the whole financial system is lower because they're not like the big four, the big four pillars of the economy. Let's say Commonwealth Bank, Australia's largest lender, that has so much money tied up in it, and it has so much of a impact on what happens on the economy. If something happened to a major bank, it would destabilize the whole economy.
Yeah.
So APRA is kind of saying, but for some of the really, really small banks, like maybe some of the small customer-owned ones that maybe only have less than $10 billion in their books, probably less than that, maybe less than $5 billion. And again, they haven't put numbers on this yet. Kind of saying, well, the risk of them falling down won't impact the market as much. So we don't necessarily think we have to put so much of this pressure on them to cover all of these hurdles when it comes to banking, when they've only got, let's say, a tiny number of staff. They might have like 20 people or something. So it's a bit like, should we really be regulating them in the same way that we're regulating a bank with thousands, if not tens of thousands of staff? So I kind of get the argument. And this is why I think the Treasurer is sort of saying we're going to consult on this. Firstly, because of obviously optics. It's not great to say, yes, we'd like to ease up regulation on some smaller banks. He's like, let's consult first and see what happens. But I think also because they want to see more detail and be like, what would that feasibly look like? Would that actually protect borrowers? Because, of course, that's at the end of the day what the government wants to do is ensure that Australians aren't impacted by this. But yeah, I think that was pretty interesting, the review. Been waiting a long time for it. So now next steps, kind of just waiting to see what happens with that consultation, when it launches, what happens, what it looks like. And then also what happens to the banking licensing regime, because as we know, a lot of the restricted ADI licenses from 4 or 5 years ago, loads of those banks actually collapsed. So I think a lot of the issue was kind of saying, there's lots of hurdles to cover to go from a restricted license to a full banking license. So can we look at maybe making the licensing framework a little bit easier so that people can actually sandbox ideas? They're not having to pass all of the sort of hurdles you need to before they start up, so that they can get to a sort of feasible economic model faster. So that's something that they're also looking at, is amending the bank licensing framework. And again, I think we talked about that previously. So lots going on there, and looking forward to seeing more about that, plus the economic round tables that are going on at the moment, the economic reform round tables on property, loads going on there. We know that some of the banks will be fronting that. I think CBA's on it. Pretty sure Macquarie went to one of them this week. I think it was on investing, though, not the banking side of things. And yeah, looking forward to seeing what happens from the economic reform roundtables on property. We're going to take a quick break here, but when we come back, we'll be looking at some of the other things we've been writing about recently, including why more brokers are diversifying, and we'll get into that just after this message. So another big story, we were talking about the majors this week, was from ANZ, and they announced a series of changes to its mortgage servicing policies for self-employed borrowers. One of a stream of different changes the majors have been doing to self-employed to try and make it easier to attract that kind of borrower. So like all of the other majors, they've tweaked their policy to kind of make it a bit more flexible for those with self-employed income to show that they can service and to prove serviceability. ANZ already had a 1-year income verification policy in place. Normally, banks were asking for 2 years to prove serviceability, but ANZ, I think a couple of years ago, moved to 1 year, and we have seen since then all the other majors move to that pretty much in the last 12 months. All say 1 year is fine. But what they're now doing, ANZ, is also saying self-employed customers who receive income through director fees or company dividends can also provide 1 year of income documentation rather than 2 when applying for home loans. So it's sort of different type of income being accepted there. And they're saying if they've got an existing fixed rate and term asset finance, lease or hire purchase, the bank will also now use the actual payment as part of the assessment instead of adding a 3% interest rate buffer on top, which again should make it easier for these borrowers to qualify for a home loan. Plus, they're saying if you're a self-employed customer and you've got a business overdraft, you can amortize that over 10 years. Previously, it was 7 years, which again would sort of increase your borrowing capacity. So a little bit of a tweak there for the major bank on what they're doing to self-employed policies to help attract more of those borrowers. We talked to Nat Smith, who is the general manager of retail broker at ANZ, about these changes and saying, well, why are you doing this? Because traditionally, the major's not really been playing in the self-employed space. And she's saying, look, and I quote, "We want to make it easier for brokers to support their customers based on their individual circumstances and property or business goals. These enhancements are a positive step forward in enabling brokers to deliver a seamless experience for their customers. We know that a significant number of our home loan applications are for self-employed customers, and this represents genuine opportunities for brokers." So basically saying, we want to see more of this business. We want to see more of it through broker channel as well, and really kind of ensuring that they're not necessarily just seen as vanilla only lending. Now, ANZ, we know already, has a lot of self-employed customers, particularly I think in the sort of medico space and the professional space as well. So lots of lawyers and medical professionals use ANZ for the high LVR, low LMI waiver policy that they have. But I think increasingly we're seeing this trend of major banks moving to really try and take on more self-employed borrowing business, but also commercial business more generally, more lucrative for them, higher returns on investment. And I think also just kind of means that they can kind of diversify their books a bit more. Will, you were talking to a lot of brokers recently about what they've been doing. And I think this is something we're seeing across the board in financial services and credit advice is brokers actually moving into diversifying their offering too. So more of them looking at offering finance to business owners, including the self-employed, but also across to asset finance as well. What are you seeing from the brokers you talked to this week?
Yeah, exactly that. So essentially there was research out this week that was basically saying more resi brokers were looking to get involved on the commercial side just because the market was so saturated. They wanted kind of an edge, maybe opportunities to cross-sell. So I spoke to Marco Conciatori, who is a broker at MDC Finance Group. So they do resi, commercial and asset finance broking. And he said basically that they wanted to be the one-stop shop, that maybe they initially got approached for resi, but then there were always opportunities to kind of cross-sell or on the commercial side or asset finance, like they do a lot of auto finance. So really interesting speaking to him. He did say that although lots of people are trying to move, he's surprised that people find the commercial side so difficult and it's actually a lot more time-consuming, complex. Often they underestimate how much more it is a step up, I think. Just to be an expert at two things is difficult. So he was kind of arguing there was a gap in the market. If you're good at both, because there's not that many yet, that there's definitely an opportunity to kind of get in there early, is what he said.
Yeah, I've talked to some lenders before and sort of about this idea that, you know, if you sort of feel like you've tapped out in your residential sort of client base, you could have clients who might need some sort of commercial lending thing, and that could be an opportunity to diversify a bit. But it is sort of like, it's a similar sort of activity, but it's also, there's quite a lot of nuances, I imagine, to sort of writing a commercial loan.
Yeah, and I think a lot of brokers who have talked, I mean, we did our New Broker Academy recently, earlier this year, and a lot of brokers there were saying, I want to do everything, because of course I don't want to turn down business as a new broker. So I want to do everything, but how on earth do I write commercial finance, particularly if it's for a big deal? You know, if you're looking at a commercial development, for example, that can be $1 billion. Like, you know, you don't want to mess that up. Or if you're looking at cash flow finance, you need to really understand what the loan is going to do for the business. It is kind of almost a different skill set than it is talking to mothers and fathers of children about buying their first home and looking at their budgeting. It's completely different. So I think a lot of the education we're seeing at the moment is about, well, how do you become up to scratch with that? And thankfully, the advisors come to the rescue with SME Bootcamp, which is coming up in September in partnership with Maxiron Capital, teaching brokers how to read business financials, teaching them how to talk to clients, SME clients. It's actually an event that has both brokers and accountants in the room. So it's really interesting because we get to see both sides of the coin, because of course accountants are so close to their SME clients as well, and they're doing a lot of this work in tandem with brokers, sort of getting the client up to a point where they can then access finance, handing over to the broker who then takes it to the next level. So I think this workshop is so invaluable, I think, for so many brokers, because you get to actually workshop deals and hear from people who've been working with SME clients about how they do it, hear how they work with referral partners, hear from accountants as well, which is really invaluable. So we'll be traveling the country in September for the SME Bootcamp in partnership with Maxiron Capital. And if you are interested in coming, it's in Melbourne on the 11th of September at the Sofitel. It's in the Gold Coast on the 16th of September at the Mantra and Surfers Paradise, and then on the 18th of September at Le Montage in Sydney. And it is free. Hooray! So thank you to all of our sponsors for making that possible. But it's an amazing event. We've got the Ascendo team who specialise in accounting and SME finance, really delivering a lot of the content, thank goodness, because I would not know where to start. So they actually go through business cases and say, here is the cash flow analysis. Let's look at pulling this apart and seeing how we can get a loan for this client, what kind of thing they could be looking for and what kind of questions you need to be asking. So it's really great hands-on workshop. So I definitely recommend anyone who is thinking about upskilling into commercial or diversifying into it to come along. But if you don't want to do that, there's also opportunities to refer out to specialists who are doing it. And there's, again, lots of partners at the SME Bootcamp and across the sort of industry really at the moment saying, you know, if you want to focus on your specialty, that's all good. Refer out to another specialist. You can still satisfy your client by giving them a solution, but without having to spend the time to actually learn how to do it yourself. So there's loads of options available. And at the event, we'll be hearing from both sort of angles on how you do that. So totally recommend it if you haven't already registered. Will, Ben, thanks so much for your time today. Next week, we've got RBA Cash Rate Day. Whoop, whoop. Next Tuesday, we'll be finding out what happens to the official cash rate. Most people, I think, now suggesting it will be a rate cut, seeing as they didn't do it in July. Any money on where you think they're going to go, the central bank?
Cut. But I said that last month, so...
Cut by how much?
25, I think.
Ben, any changes to that?
I'm not putting any money on based on the last. I don't know what's going to happen.
What do you think?
I think cut 25.
Okay,
Yeah, I have seen a couple of people, I think Bendigo Bank and maybe it was someone else, Bell Partners, I think both were saying maybe they'll do 50 because they didn't cut in July. I wasn't sold on a July cut rate because I was like, I think they need to wait for the quarterly CPI data and there's no real emergency to make them move quickly. I think they will cut this time round. Looking at the American figures that we've had recently was a little bit sort of tighter than most people expected. So I think that might also feed into their thinking. But as we know, we never know what they're going to do. But we'll be telling you on Tuesday when they make their announcement on Tuesday afternoon. And spoiler alert, we have the Deputy Governor of the RBA coming to speak at the Women in Finance Summit in November this year, which we're super excited about. So we had reached out to the central bank to say we'd love someone to come and talk to us about how you do all this and what kind of things you're seeing and what you take into consideration. And we're so thrilled that we're going to have the Deputy Governor, Michelle McPhee, come along and talk to us at the Women in Finance Summit in November. So we'll be delving into all of that too. Hope you guys have a great weekend. Any nice plans for the weekend?
I think I've got some family stuff. Yeah.
Family stuff?
Sounds pretty onerous.
I'm completely broke from all the Lions games.
Yeah.
So it'll be a cheap one, yeah.
A cheap one, yeah. After my holiday as well, in which I did on Sunday watch the Lions game as well. The weather was terrible because it cooled off for like half an hour, didn't it? I don't have huge plans. I actually have to read a couple of books because I'm way behind on my reading for my sort of targets. I need to read a few things. And then just boring stuff, I guess, like life admin, doing some cooking. My husband's recently got into sourdough, so
oh God,
probably, yeah, I know, midlife crisis, trying to figure out how to come up with new sourdough ideas. If anyone's got any recipes or thoughts, let me know. But other than that, pretty quiet one. So looking forward to next week's RBA rate decision and bringing all the news to you then. We hope you have a fab one and we'll catch you next time for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.